I'll be honest, you missed out big time on the massive Ozempic trade that's been unfolding over the last couple years. But do not worry, there is a hidden, less talked about company that may be in position to benefit from what's going on in the weight management industry. This company, once trading for over $100 per share, is now struggling to stay above $1. Dare I say, a true penny stock unicorn. I've personally been buying up shares of this company, and there's reason to believe that the golden era of this business may very well still lie ahead. While sure it may be at $1 per share right now, it's unlikely that it will stay at this level for long. Now, to fully understand what's going on here, we need to talk about the rise of Ozempic and other GLP-1 drugs like Wegovy and Mounjaro. They've been nothing short of game changers in the weight loss and diabetes management sectors. Originally developed for type 2 diabetes, these medications work by decreasing appetite and food cravings. People using these medications feel full longer, helping curb their cravings. They don't want a sweet treat every 13 minutes, leading to substantial weight loss. The effectiveness of GLP-1 drugs has led to skyrocketing demand, particularly as high-profile users and influencers have shared their successful weight loss stories. It feels like we're finding out about a new celebrity success story on this drug like every day. Hollywood can't seem to get enough. Everyone is on it, everyone's talking about it. In fact, demand has spiked so much that there have been periodic shortages as manufacturers scramble to keep up. Now, as obesity rates remain a significant public health issue and with weight loss often being difficult to achieve through lifestyle changes alone, GLP-1 drugs are increasingly seen as a new accessible solution, with doctors prescribing them more widely and loosely, even for those without diabetes, and pharmaceutical companies are working to develop similar treatments. The market for GLP-1 medications is expected to grow very rapidly. This growth represents not only a shift in how society approaches weight loss, but also a massive economic opportunity in the health and wellness industry. GLP-1s aside, society as a whole has been moving towards living healthier. Every company now scrambles to offer healthier alternatives for whatever products they sell. I mean, if you want to sell something off a shelf right now, it better look like a woke Instagram social issue story post. The average consumer is growing more and more health conscious. And I have a feeling that with the recent election results and with who the president-elect plans on adding to their advisory board, it'll just add fuel to the fire. Now, we won't focus on the unknown long-term effects of some of these new treatments. You're just here to make some money. So let's talk about the real opportunity here. The obvious one is, hey, let me just invest into companies manufacturing or selling these GLP-1 prescriptions. Which, great thinking, man. That is a fantastic idea. You're just about 5 years late to the party. That ship has sailed, but easy money has been made, low-hanging fruit has been eaten. We have to look deeper at companies that can win from this rise in a not so obvious manner. Kind of like buying Nvidia because of the rise in AI. You're not buying the company because it's directly an artificial intelligence player, but AI can't function without the GPUs Nvidia creates. And so if you apply a similar logic to the GLP-1 industry and do enough digging, you may land on the company I've been investing in. This may seem like a stretch, but hear me out. I've got two words for you: Weight Watchers. If you're over the age of 12, you likely know this as a household name synonymous with weight loss, yet it's down from $100 per share to currently struggling to stay above $1. It's at a measly $80 million market cap, which for a company as well known as Weight Watchers is, well, simply shocking. The company's only worth $80 million. I mean, your favorite Instagram guru will claim they make enough to buy this entire thing. If you're not familiar, Weight Watchers is a weight loss and wellness program that helps people manage their weight through a points-based system, coaching, and community support. Basically, they were a paid Discord subscription before that was cool. The company lost a lot of excitement after its main spokesperson and board member Oprah stepped down and sold all her shares. You get a rug pull, you get a rug pull, everyone gets a rug pull. But that's not the end of the world. A spokesperson can get replaced. It does not justify the drawdown in stock price, so let's look at how Weight Watchers makes their money. A large portion of their revenue comes from their digital subscription fees, which are about $10 to $20 per month. And here is where you should pay attention, lock in. Maybe I should put some Subway Surfers gameplay. This is where the opportunity lies. This is important. What they currently sell is a very low ticket offer. $10 a month is not much at all. However, they're playing a volume game. They have almost 4 million monthly subscribers, bringing in $800 million in revenue in the last 12 months. Again, this is a company currently trading at an $80 million market cap, yet their annual revenue is 10 times that, and we're not even at the good part yet. Here is where things go from just, wow, this seems interesting, seems like it could be a good buying opportunity, to absolutely mind-blowing. Last year, Weight Watchers acquired Sequence, which is a digital health platform for clinical weight management. In fortnight Gemini terms, they bought a company that can prescribe pharmaceuticals through a video call. With this acquisition, they now put themselves in a position to prescribe things to their community of almost 4 million subscribers. And at this point, you can maybe see where I'm going with this. Imagine having that many paying monthly subscribers in your weight management program and then suddenly being able to digitally prescribe something to them. Well, that's exactly what's currently unfolding here. What's critical to understand is that these aren't just people on a free email list. This is an audience of people already paying money to be a part of this program. They are people actively struggling to manage their weight. This is a red hot, ready to buy audience. And now just a few weeks ago, Weight Watchers dropped the big news. They will now be offering GLP-1 compounds to their community, which changes everything. Remember, this is the prescription that's been out of stock everywhere due to insanely high demand. This is a prescription we've been hearing about all over the news, in podcasts, in Hollywood. Everyone is praising it, talking about how much weight the users are losing. Everyone is itching to get their hands on. The Weight Watchers community of 4 million have already likely heard about this prescription, and it likely would not take much convincing for them to sign up. I know this sounds a little dystopian, but let's just think about this from a capitalist monster point of view. This is the ultimate upsell. An Ozempic subscription can cost up to $1,000 per month. Weight Watchers is now in a position where they can turn their 3.8 million $10 per month subscribers into paying hundreds of dollars per month each. Because of their acquisition, they have the infrastructure to digitally prescribe this medication, and in doing so, increase their revenue per subscriber by more than a factor of 10. It kind of depends how much they want to charge for it. They could be a factor of 50 or even up to 100. Even if only a small fraction of their community decides to go through with this option, they would still stand to exponentially multiply their revenue. This announcement is fairly fresh, so we don't know how this move will play out for them, but that's where the opportunity is. Once they report how well or how awful this is turning out for them, the stock could either go parabolic or it could be over for them. Right now is when everyone is deciding whether all of this makes sense or not. As I'm writing this analysis, they have just reported their latest earnings, and although they beat expectations, the stock did not react positively, allowing me to buy up even more cheap shares. If we look deeper into this latest report, you can see their clinical subscribers have grown at 71% compared to the prior year. They are ramping this move up. That aside, they also have a new CEO in place that I believe is taking the company in the right direction. And we also cannot ignore the overall macro culture shift happening in our society. People are seeking community. They're fighting back against social networks. People want real life experiences. They want real life friends. And Weight Watchers is exactly that. They are a community for people who are all going through the same struggles. Now, I'm sure you could tell I'm personally very optimistic and have opened a $15,000 position in stock ticker WW. Sure, their financials aren't exactly in the best shape right now, but if they can pull this GLP-1 play off, why couldn't they hit $100 per share again if they've done it in the past without having this genius upsell? That alone, them hitting their previous all-time high, would be a 100x return from where they're currently trading at. Or, well, it could also go to zero. This isn't financial advice. This is a random YouTube video, but if you enjoyed it, please consider subscribing.